All right, welcome to another episode from the Chart Readers. We are continuing our major market breakdown, looking at the Dow Jones and the DIA, the ETF equivalent. I'm zoomed out a little more than I wanted, but it was the only way to show this line as well as the whole drop. Look, last week I was very much pessimistic on how it was going to turn out, it being this week that we just had. And man, I for sure got this wrong, okay? I often say if you disagree with something I got to say, please throw it in the comments. Someone actually did, thank you, Tony, and it actually helped me a lot, okay? So I'm not saying it as a joke or to sound nice. I legit say like if your opinion's better than mine, it helps me a lot. So don't feel bad if you disagree. All right. All that said, before we get into the details, what are we going to do? Same thing we always do, right? We'll take a look at the daily and the weekly to see how things are shaping up. We have our 5 moving averages, these horizontal support and resistance lines. This one's gold because I've been calling it my golden lines of trading. I have a few up here. It'd be beautiful if we're there. We're not quite there yet, but it's better than the red death line down there, right? That's the only reason the color code's there. And then when we're done up here, we'll use the MACD, RSI, and volume as our lower indicators. Hey, if you can please like and subscribe, it does really well with the YouTube algorithms. But even if you don't, just thank you so much for your time and thanks for watching this, okay? Look, let's talk about why I got this wrong, okay? And then we'll start talking about what happened and so on and so forth. So look, what really got me was this 50 moving average line, okay? It's done such a monstrous job just keeping this thing from falling down for for literally a month and a half at the very minimum, right? And sorry, I didn't mean to zoom out like that. We clearly lost it and very quickly came to this 100, okay? And I made the video right here, and my guess really was that we were just gonna kind of come down to the 200. I really didn't expect this bounce. And look, I've said it often, if you can bounce on the 200, it's generally a good bounce. And I also say, hey, look, losing the 200 isn't that easy, right? So I actually didn't take any of my advice. I got a little extra scared, and you know what? The technicals did their job. This was a pretty low RSI as well, right? This actually hit 27. I always say 30 is generally really low. And again, it just, a lot of things culminated into what would have been a decent rebound. All three, the NASDAQ, S&P, and Dow Jones did far more than a decent rebound. They actually did really well. They all got these like beautiful 2-day candles. I mean, it's huge, right? The one interesting thing is everyone has to break the 20. That's the next goal for Monday on NASDAQ. It's the next goal on the S&P 500. Dow Jones has both the 50 and the 20, right? You see 2 lines, you see 2 lines, right? Everyone else only has 1 line. This one has 2 stacked, and that's always a little bit harder to break. So if this thing gets over 33.5, it actually might be pretty monstrous. Look, red so far has been a nice green stack right there, right? So this thing does want to go up to here. Let's just see what these two say. I'm telling you, this is the monster test right here. If it gets over both, I know for sure NASDAQ and S&P will. I don't want to say I know for sure because nothing's guaranteed. You know that. I obviously got last week wrong. But get over these two is going to mean so much. I'm not sure if it will. I'll be honest. I would definitely want to use my better set of indicators, the one I call the 1, right? We're looking at chart readers. Deadly intermediate. This one's just a little better. It gives me a little more, and hey, maybe that'll tell me something that this doesn't. But yeah, I wish these were just a little better to believe it's going to break the 2. The other ones, honestly, I kind of felt like we would break the single line. I just don't like this double stack right here, okay? Let's come to the weekly. Okay, look, huge weekly, right? Instead of losing the 50, look, we obviously just lost it on the daily devastatingly, right? Instead of doing the same thing on the weekly, we recover. All right, we couldn't get over the 20 again. That 20 is just a pesky line. I hate and love the 20 so much. Okay, so there's another set of 2 right there. I mean, there's a lot happening. There's a lot happening for Dow Jones. And look, these 2 are at least over the 33.5 from here, right? So breaking these is then going to bring it to another test here. Dow Jones has a lot going on. It actually has more going on than the other one. So I'm curious to see how this plays out. I don't have great opinions, and like I said, I was a little more bullish on the last two just because there were less moving averages. You know what I mean? Okay, interesting. So Dow Jones is actually the only one that's now playing with the 20. Okay, everyone else being the Nasdaq and S&P 500 are still trying to play with this 8. Okay, so the fact that we've broken the 20 the 8 and come to the 20 is an interesting thing. What I don't like is we've actually now lost the 20 for 2 months in a row. Okay, I know this looks like a good green candle that survived the 8, but what I'm looking at is we lose the 20 and we've actually kind of confirmed we've lost the 20. Now, don't get me wrong, this could be worse. We could have gone lower. We actually got about 50% candle. Like, this isn't a bad, monthly. And this is actually, okay, I'm wrong. Woo, my bad. We've now lost the 20. This is now our current month of March. That makes sense. Let's get back over, okay? Let's get over this candle at 31, 34, 120, okay? Because I don't want to go, we were this high, then we were this high, then we're this high. I don't want to have a downtrend kind of happening here. Let's break this 20 and let's break this line. That's for sure what I need to happen end of the month. Again, the last thing I want is to let me just draw it real quick, right? I don't want to end right here and then have this going on, right? That would not be good. I want to close right here and get over this bad boy. So sorry for my confusion. Oops, hold on. Nope, nope, nope. Sorry. Whoop, nope. Hold on. Nice. We're still good. There we go. That's what I was trying to do. Sorry about that, team. Again, though, that's pretty much the monthly right there. One more apology. Okay, what are we going to do real quick? We will look at the DIA, the Dow Jones ETF equivalent. Same chart on the daily. That's beautiful. Same chart on the weekly. Again, doesn't lose the 50, is able to maintain. And actually, does this... Oh man, 7 cents under. This closes at 33421. This was supposed to break 29. So by 8 cents, we missed it. That sucks. But again, both the weeklies are under the 20. This one's just a little closer. And again, has the other double test right there. It had the double test. Yeah, it has the double test right there. And then the monthly, we've lost. Ooh, this one got a little closer to the 8 than the other one did. I know the other one was close, but this was definitely closer. Nonetheless, let's retake the 20 and we'll be all good. But I like that they both said the same thing. Sorry about my little technical difficulty close to the end. But one last time, I appreciate you so much. Thank you for watching this. Have a great one.